Hello, this is Mark from tradinform.com and welcome to this video on how to trade Bitcoin using a breakout strategy. In this video I will be demonstrating firstly the breakout strategy, then I will show you how we can test this strategy using historical data, and finally I will be showing you the results of the test of this strategy. Before I go any further, I would like to remind you that if you like this video, please hit the like button, and if you want to get more content like this, please remember to subscribe. So once again, early 2018, Bitcoin is all over the financial news, and in fact all over all of the news, for the reason that it is now fallen well below $10,000. It is in fact today below $9,000. And this is from a market that was almost touching $20,000 just over a month ago. So for traders who like lots of action and volatility, this has been a fabulous market. But starting from today or from any point in the future, how can we trade Bitcoin safely, profitably, and without a high risk of blowing up our account? Now, I have already recorded a video about this topic. In that other video, I look at the trading Bitcoin using the Arun indicator, and which is another form of breakout indicator, and there is a link on the screen if you would like to have a look at that video. But the breakout strategy that I'm going to show today is even simpler. This uses channel breakout, sometimes known as Donchian bands, or the turtle breakout system. We are basically looking for a close or even just a breakout from recent highs or lows. Looking back over the price history of Bitcoin, it has tended to move quite strongly from one range to another, and this is the sort of market that can work very well with breakout strategies. So quite simply, the strategy uses channel breakouts, and the way I am going to demonstrate that strategy, or test rather the results of that strategy, is using a Excel spreadsheet. Now that is shown on the screen at the moment, and over here on the left I have Bitcoin price data going back to 2014. This isn't a mature market, but we've got price data here going back about 3.5 years. All I have got in these next columns here are recent highs and recent lows, and they are set as a variable, and as you'll see later, the reason I have set this as a variable is so we can test different time periods. Okay, so this is nice and simple. If you were doing this formula yourself in Excel, you would just use the max and the min formula. I've done it slightly different way for the reasons that I've just explained. Over here to the right, you can see the rest of the spreadsheet. This is a trade-informed backtest spreadsheet, which is a template for testing trading strategies using Excel. And if you'd like to be able to test your own trading strategies and want more information about these, there is a link on the screen at the moment, so please check that out. Okay, so this trading strategy, as simple as you like, maximum and minimum, there's nothing else to it. Now, to have a look at what the strategy is doing, we can click over here. Now, this is the results tab of this particular spreadsheet. You could certainly do this yourself in Excel. There are advantages to using a trade-informed backtest spreadsheet, and one of those is we can try different things like profit targets and stop losses, which are built into the spreadsheet. Very simply, we're using a notional starting capital of $100,000, and if I skip down here, in fact, I'm going to skip down right to this one, the length of the Donchian bands. This is probably the most important one and the thing that I think most people will be interested. I've set it here to just 5 periods. Now I'm using the daily time frame. This strategy could certainly theoretically work on lower time frames, 12 hours, 8 hours, 4 hours, even 1 hour. Although I'm not testing those today. I'm using just the daily time frame. So I can change this cell. This is a variable cell here. And as you see, every time I change this number here, the results update over here. So I thought it was quite interesting to start with. A very low, this would be, for most markets, 5-day breakouts would be completely useless because of how much noise and other activity would make this a losing proposition. But historically, the extreme volatility of bitcoins has made even this a profitable strategy historically. Now if I get this up to the sort of range that most people would expect for a breakout strategy, we can see here that the principal difference is we're getting fewer trades. In fact, we've only got 50% winning trades. But for a trend following breakout strategy, this is an excellent winning ratio. Could even push it all the way up to 55, and we can see here that we actually, although we've only got a small sample of trades, we do push it up over 50% of winning trades. Also get a very nice net profit. Now the few of the calculations here, we've got compound annual growth rate, we've got a maximum drawdown. Now this is the underlying market, and we can see to date with the huge parabolic rise up here and then the sickening swing back down for people who invested up here anyway, back down here, we're up over 150% for the compound annual growth rate. This is despite this fall here. So this is a staggering compound annual growth rate, but we cannot go back to here. We cannot rewind time. We can only work with what we've got. So by any standards, annual growth of 50% of capital is pretty decent. If I can bring this back down, we see we have a lower annual growth rate, but our max drawdown has stayed pretty consistent. Now for me, max drawdown is one of the most, if not sometimes the most important statistic that I'm looking for in a trading strategy, because for the simple reason that if drawdown gets too high, most or even all of us are going to bail out of a strategy. It's very, very difficult to keep trading a strategy in the face of losing trades, a succession of losing trades, and especially large losing trades. So 21% compared to 69% is pretty good. It takes a very staunch investor to withstand 70% drawdown and still stay in the game. Now there is more in this spreadsheet. One of the things that we can do is, one of the things that I've programmed into it is, at the moment I'm using a closed basis. Now this is a very, very easy way to run the strategy for the simple reason that, well, Bitcoin doesn't really have an official close price, of course, because it's traded around the world, but it means that anybody can trade it. They can check the prices once a day whenever they think is appropriate or whenever it fits in with their lifestyle, and enter and exit positions at that time. So there is no requirement to be at a trading desk monitoring the market. You can simply switch it on at a consistent time and enter or exit as appropriate. But I've then put in another feature here, and this is entering on high or low. This takes a little bit more work, but it does make a small difference, we can see here. Now, the difference here is, instead of entering whenever we want on a closed basis, we're actually setting market limit orders and market stop orders rather, and we are getting into a price when it breaks out, literally at the moment when it breaks out. As you can see, and if I flick around to a few others, it does make a difference for the profitability based on historic data, and in fact, in particular for the low time frames, it makes a huge difference. What I would say as a counsel or a slight warning against this is if you're entering using stop orders on a high-low point, there is a greater risk of slippage, which is not reflected at the moment in this spreadsheet, although we could very easily put in a cost of trading to include how much it costs us, how much our broker is charging us, and how much we think slippage will affect our trades. So if I take that out, we can see that go back to 55, we get a very high net profit, but as soon as I start to put in cost of trading, it has very little effect at all, because for the simple reason we're not entering many trades. Now there is the strategy, it's as simple as that. I'm going to show you one other feature of this spreadsheet, and that is if you want to analyze different scenarios, all we can do is, we're looking at the 55 Donchian bands, just click here and we've got a copy here. So I can have a look at that, and I can click back here and I might compare it here to the 5. So we have a way there of comparing our strategies. We can see quite easily difference in profit factors, but also significantly a big difference in the number of trades. So there is the way to trade Bitcoin using a breakout strategy. I have presented the results that I've got based on the historical data, and also shown how you can test your own version of this strategy. I hope you enjoyed this video. If you did, please hit the like and subscribe buttons, and also for more information about trading the financial markets, please go to www.tradinformed.com.